Now, Shriram Finance has outperformed the benchmarks for over a year. Now, what's driving this growth and how stable is the asset quality? Help us analyze all of these questions, Mithali.
Right, so Shriram Finance has significantly outperformed the broader markets across the time frames. If you see the year-to-date performance, the stock is up around 42% compared to 10% for Nifty and around 8% for the Financial Nifty. Also, if you see an on-year basis, Shriram is up 45%. Again, beating its benchmarks. Since October 1st, that is less than 2 months, it has gained around 27% against the Nifty and Nifty Financial Services. Now let's have a look like what is behind the growth drivers and how is this strong outperformance being led. So the company is seeing stronger growth momentum across its lending segments, and a supportive macro environment, likely rate cuts are also helping the sentiments to boost, along with the asset quality, which is said to be stable and is improving, which actually is boosting the consumers' confidence. And also the profitability stands to remain healthy, supported by consistent ROA delivery. Now finally, reasonable valuations are also aiding up for the company's outperformance compared with the peers have drawn the institutional interest. Now, if you see the guidance, so the company has guided for 16 to 17% of AUM growth for FY26, and so far the performance is tracking well. For Q2 FY26, we saw that the AUM grew around 15 to 16% year-on-year basis, and also in Q1, that figure came around 16.62% of growth. Disbursements were also seen up around 10.24% year-on-year basis, and growth continues to be led by the commercial vehicle segment, with gold and personal loans also contributing. Now, the management expects H2 FY26 AUM to grow around 2% higher than what they had achieved in H1. Now, the asset quality, let's have a glance at that. Asset quality remains stable with a clear improving trend. GNPA stands at 4.5% and NNPA stands at around 2.49% in Q2 FY26, and both these metrics have stand to improve compared to the previous quarter, especially if you see the elevated levels for Q2 and Q3 last year. Now, if you have a look at the margins and NIMs, we have that the margins stand to be a key monitorable for the company, and management had guided for the NIM improvement as the access liquidity normalizes. However, the improvement in Q2 was sub-delayed because of the persistent longer than expected, and the incremental cost of funds also stayed elevated at 8.07%, putting temporary pressure on the yields. Now, return on assets also, the management has guided the performance around above 3%, and the ROAs came for the Q2 at around 2.89%. In terms of valuations, if we see, the 1-year forward PBV has risen 1.8 times 6 months ago to 2.18 times currently. Now, this is above the company's 5-year average and also indicating a re-rating driven by the strong fundamentals. Also, we have heard about the MUFG deal updates from our sources, and a key recent trigger has been in news. So MUFG is reportedly in advanced talks to buy 20% stake in Shriram Finance, and the deal value is pegged at around 30,000 whopping crores. Management has acknowledged that some discussions are ongoing, adding to the positive sentiments around the stock. Also, if we see the brokerage stances, 34 analysts have a buy rating, while 4 recommend hold and only 1 has a sell call. So concluding overall, Shriram Finance continues to show strong growth, improving the asset quality, stable profitability, and these factors together explain the stock's strong outperformance throughout the year.
All right. Thank you so much, Mithali, for getting us all those details. But with